Yeah, we are back. What's good, y'all? Welcome back to the Market Mentor Ventures channel. My name is Dehuda Hunter, aka the Market Mentor. Just wanted to start this off by giving a quick shout out to the new subscribers that we have, and for those that have been following us since June, I want to say now. Um, Almost approaching the end of the year, 6 months in. So appreciate y'all that have been following and appreciate the newcomers. Continue to like and share. We've been on an amazing journey and the journey is only going to get better. So this month's monthly market breakdown is going to be a little bit different from the others. I'm doing away with the slides this month and it's just going to be you and I. We're going to get into it and talk about what the almanac is showing, what I personally think about the market right now for this month. And I think the main topic that I want to cover is how historical context is just historical context. So starting off with that, I say that to say that September, last month, we talked about September being the worst month of the market. It's typically the most bearish month of the market. And the market said, I don't know who told you that, because it had continued to set new all-time highs after new all-time highs going even into last week. Today is October 5th. So even within the first week of October, we are continuing to set new highs within the market, which is uncharacteristic, right? One thing I did mention in last month was the fact that post-election years, Q3 tend to be modestly positive. So it has been following that current track record so far. So here we are in October, and October marks the worst 6 months of the year end. So the worst 6 months of the year ends with October. And after that comes the best 6 months of the year, which is from like November into April-ish. And so in the Almanac, it discusses that October is actually the best time to find an entry so that you can ride that year-end rally, or others may call it the holiday rally. Another thing that I found interesting was that it states here, buy techs and small caps and soon wear a grin ear to ear. I found that interesting because I'm going to break down some facts for you guys. So per the historical context, for the month of October, the win rate for the S&P 500 has been 59%. 59% of the time, the S&P 500 has ended the month up. The Russell 1000, which follows the large caps, has ended 62% up. The NASDAQ, which is all our tech companies, has ended October up 55% of the time. And then we have our small caps that has ended a month up 58% of the time. So I was kind of interested. Mind you, those are all great percentages. More than half of the time, each indice has ended up positive. But it was interesting that they specifically highlighted tech and small caps because tech, although it is 55% of the time, the S&P has been more than that, and so has large caps. Small caps and tech was actually the lowest percentage when it came to how it finished the month positive. So that was interesting to see. We also have post-election years, which we currently are in. For this month, on average, the S&P 500 has ended up 1.3%. The NASDAQ has ended up 1.9%. So putting that also now into the equation, it kind of makes sense. Although the NASDAQ finished October up 55% of the time, it did have a larger gain than the S&P 500. So I think that's more so what it's getting at. I didn't see that information for the small cap companies. Actually, hold on. No, small caps actually was up 0.6% on average. So that's where it makes sense. So it's important if you are utilizing the almanac to pay attention to the data and then make sense of it. All right. So that's a key point. What we are currently looking at right now in the market, S&P just closed 3.5% last month. NASDAQ closed 5.3%. Great numbers. Kind of surprising that it all happened in September. But the one thing that I am paying attention to, although it says this is the best time to find an entry to ride that year-end rally, is the fact that all these indices are at all-time highs. Okay, that's what I'm going to be showing you guys shortly. And I've stressed it probably every month now. You never want to be buying anything at all-time highs, which is where we currently are. Another thing that I think is very important to pay attention to is the Fear and Greed Index. Currently, we are at a neutral phase sentiment for the market. So that's nice, but we are closer to the greed side than we are to fair right now, being that we are at all-time highs. The main thing that may make this month different is the fact that we are currently in the middle of the government shutdown. So last week we already missed the September jobs report. That was supposed to be reported last week. We have inflation data that is supposed to be coming in mid-October, October 15th. If the government shutdown prolongs beyond that, we miss out on that data, that clarity on that data. And then we have the Fed making their rate cut decision on October 28th, 29th. So essentially, they'll be blindly making a rate cut decision without the data that we normally would have. And the jobs data and the inflation data are two key data points that they use when they come to making that final decision. Not the only, but they are two key factors that they use. So it's going to be important to see how that plays out. Let's get into the chart so I can show you what it is that I am looking at. All right, so cool. This is the S&P 500. For those of you who do not know what this type of drawing is, these are my Fibonacci levels. If you join the roundtable in my Patreon, you see how I go into detail on how I use different strategies, different indicators to find appropriate entries for my, not just my trades, but also for long-term investing. But what I wanted to point out here for you guys, like I just mentioned, was look at this. We're at resistance. I like to shade this area red. I've customized my fib so I can visually see things just pop out at me. But we see here that we're at all-time highs. We need a cool down. A cool down is overdue, right? So that's the S&P 500. And we look at QQQ, which is the tech and the NASDAQ, at resistance, all-time highs. We need a cool down to some point. Here is your large caps. Also at an all-time high. Within the Patreon, we do break down how we can find certain areas to set alerts for finding a possible entry that is worth it. Like, for example, I'm looking at this one here. This is the monthly time frame. I see that this area used to be resistance, and then we came back, we broke through it, and here we are again, and we broke through it again. So this area may serve as support. If it does pull back to that area, I'll be looking for buyers showing back up at that monthly area that we just surpassed. That's just one example of being able to find quality entries, although prices may be at all-time highs. And again, like I said, if you guys join the Patreon, the roundtable, I have the whole first month free for you guys to view and get a sneak peek into how we do the research, how we utilize AI along with the technical. So we're combining our fundamental analysis with our technical analysis to come up with a sound decision on our options trades that we're getting into and the long-term investments. So I'll make sure that I leave a link in the description below for you guys to join. And we have a 7-day free trial. Come on in, get some information and be able to utilize and take actionable steps that can benefit you and your portfolio. And then lastly here we have the small caps that I mentioned, IWB, also at all-time highs. So even just having this visual alone is a good starting point for us to realize, hey, things are at an all-time high. Yeah, we're not in greed. We see we're at neutral. We're closer to greed than we are fair. We may want to have some patience right here and wait for a pullback. That will be in our best interest and give us a greater risk to reward ratio in profiting long term and on an options trade in which we may want to go into. So again, bottom line, October, it sets up the year-end rally, but this year may be different. This year may be different. It's important to pay attention to area of support. Utilize your RSI indicator, which shows you whether something is overbought, oversold. Utilize the market sentiment, the fear and greed index, to see where we are at in the market. What is the sentiment showing before making any decision? Like I said, join our Patreon. We go and do deeper dives into individual stocks, showing you how to find great prices to enter. So that's what I got for you guys this month. I wanted to do things a little bit differently. If you guys have any questions, you can leave them down in the comments and tap in with the community. So till next time, catch you guys later. Hope you guys have a blessed rest of your weekend and also rest of your week.